Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, hope everybody had a fantastic Thanksgiving weekend. We wake up this morning to a pretty familiar sight. New all-time highs. We've got move up and a continuation of the upper band ride that we've been seeing lately. And we had a little bit of give back in the overnight, but the best they could do on the downside, 25.96 half. So, it's a situation where we have a new weekly pivot coming in at 25.90.75. This is the hourly chart. So you got a new weekly pivot coming in 25.90.75. 26.04 half is your upper level. It's a situation where until the bears can convert the weekly pivot, and I mean convert it to resistance, I don't mean trade below it, I don't mean test it, because we zero out this chart a little bit. We see last Sunday, Monday, there was a little bit of a test. We made that double bottom there at 67.68. They popped it over the top, and I mean that was that was all she wrote at that point. The bears had a little bit of weekly pivot resistance the week before. We went down and we touched the lower band, and they lost it after that, which is okay. I mean, that's a two-sided week. The bears were more than relevant during that week. If you want another week that looks like this versus another week that looks like this, then your key, again, as always, is the weekly pivot. If you convert the weekly pivot and you can go ahead and get down and test the last week's lows down at 67.68, then the bears will put together, a two-sided week, no matter how it turns out at the end of the day. That's a lot to ask of the bears. It's a lot to ask of a side that has been taken now basically 30, almost not quite 40 handles straight up off those 67.68 lows. So my expectations are, I want to see how the round number is dealt with today, the round number 2600. I want to see how comfortable is the market trading above 2600. It wasn't super comfortable with it on Friday, and it hasn't been comfortable with it in the overnight. But if 2600 becomes support and we continue to push along that upper level and we become pretty comfortable trading up over 2600, then I think we're going to be back to business as usual. You're going to see dips get bought, you're going to see higher highs, and they're going to continue to drag this market as high as they want to drag it. And whether that's right or wrong, whether you think that's what should be happening or shouldn't be happening, that is the direction of price. And because that is the direction of price, that needs to be the direction of the majority of your trading. Okay? The vast majority of our trades are longs. We do shorts, they're counter trend. We caught the move down to 55 a couple weeks ago. That was awesome. But it's a situation where you need to trade with the trend. You need to understand where you are in the calendar. Now we're sitting between Thanksgiving and Christmas, and that tends to be pretty bullish. Now, whether they pop the balloon in January or not doesn't matter for today or tomorrow or the next day. You got to trade what you have in front of you, and what you have in front of you right now is a market that can't convert the weekly pivot to resistance, and a market that just might get comfortable trading above 2600. And if the answer to those questions are more of the same, then you need to be buying dips and staying with that upward price action. All right, everybody have a fantastic day. I'll be out with a midday update, and I will talk to everybody then. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.